If you died tonight, your family could not touch a single dollar in your bank account tomorrow morning. Not with your will, not with a lawyer, not with a death certificate right there in their hand. The money would sit frozen behind the counter, sometimes for months, while the bills kept coming in. And here is the part that makes people angry when they finally learn it. There is one free form that stops all of it. It is called a Payable on Death form. It takes about 10 minutes. And it costs you nothing. Your bank is never going to sit you down and tell you it exists. Most people find out too late, standing at the counter the week after a funeral, being told no. Today I am going to make sure that is not your family, what the form is, exactly how to file it, and the 4 honest catches the other videos skip, because getting this half right can hurt you almost as much as doing nothing. I am Hank, and on this channel I help you keep more of the money you already earned. Let's get into it. So what actually happens to your bank account the day you die? The answer surprises almost everyone. Your will does not control your bank account. I know that sounds wrong. You paid good money for that will, it names your kids, it is signed and sitting in a drawer. But a bank account is a contract between you and the bank, and it runs on a completely separate track from your will. When you die, the bank does not open your will. It looks at one thing: whose name is on the account as the beneficiary. If a name is there, the money goes straight to that person, usually within days. If that space is blank, the account belongs to your estate, and that means probate. So what is probate? It is the court process that settles what you leave behind, and here is why it matters. In most states, if the account is above a small limit, and for most people it is, the bank legally cannot release a dollar until probate has run its course. Now, if the whole estate is tiny, under your state's small estate limit, the family can sometimes skip probate with a short affidavit. But for an account with real savings, that means full probate, and probate is not quick. Most states make the family wait 3 to 6 months, and a few run longer, just so any unknown creditors can come forward before anyone sees a cent. Months. While the funeral bill, which can easily run past $10,000, sits on a credit card collecting interest. That is the trap. And it catches the people who thought they had done everything right. Here is the fix, and it is almost insultingly simple. You walk into your bank, or you log into your account online, and you name a beneficiary on the account. That is the whole thing. It is called a Payable on Death designation, a POD for short, and it is free. What that one form does is lift your account clean off the probate track. When you die, the person you named brings a certified copy of the death certificate and their own ID to the bank, and the money is theirs. No court, no judge, no months of waiting, no probate fees eating into the balance, not 14 months, a few days. Every bank offers it, every credit union has its own version, and there is no fee to set it up or keep it. While you are alive, you keep total control. You can spend it all, close the account, or change the name anytime. Whoever you picked has no access and no say, right up until the day you pass. So why doesn't everyone already have it? Because nobody tells them. The lawyer who wrote your will usually does not file it, because it is a separate form at a separate place. So it just never gets done. That is the reason families end up stuck. But I am going to be straight with you about something important. Payable on death is not a magic wand. There are 4 things you have to get right, and almost nobody explains all 4 of them. Catch number 1, and it is the big one. A lot of you are already thinking, I don't need a form. My spouse and I share a joint account. And you might be right, but you need to know the difference because it decides which one to use. A joint account with right of survivorship means both people own the money right now, and when one of you passes, the other simply keeps it. For a married couple, that is often the cleanest setup. Your spouse walks in with a death certificate and keeps full access that same day. One warning, though. In a lot of states, that survivorship is not automatic just because you are married. It has to be set up that way. Confirm it, but here is the danger with joint accounts. The moment you add someone as a joint owner, that money is legally part theirs, today, while you are still alive. So plenty of loving seniors add an adult child to help with the bills, with no idea what they just did. If that child gets sued, goes through a divorce, or falls behind with the IRS, their creditor can suddenly reach right into your savings. This is exactly where Payable on Death is the safer tool. That beneficiary owns nothing while you are alive. Your money is completely walled off from their debts, their lawsuits, their divorce, right up until you pass. So here is the honest rule of thumb. For a spouse you fully share your money with, joint survivorship is simple, and it works. For an adult child, use Payable on Death, so you help your family without handing your life savings to your son-in-law's car accident. Same goal, different tool. If even that first catch was news to you, do 2 quick things for me. Hit subscribe and tap the bell. These rules change and nobody at the bank is going to call to tell you what your family is owed. 3 more catches to go, and the next one quietly pays the wrong person. Catch number 2, and this is where the other videos really mislead you. They tell you to file the one form like it covers your whole life. It does not. A Payable on Death form covers your bank accounts, your checking, your savings. That is it. So here are the gaps you have to close. 1. Every CD is its own separate account. If you have 3 CDs at the same bank, each one needs its own beneficiary. 2. Your brokerage account, your stocks, and your mutual funds uses a different form. This one is a transfer on death, a TOD, and you file it with the brokerage, not the bank. No transfer on death form, and those investments march straight through probate. 3. Your retirement accounts, your IRA, and your 401k already carry their own beneficiary form built in. But here is the part that bites people. That beneficiary form beats your will. Whatever name is on it wins, no matter what your will says. And most folks filled it out decades ago and never looked at it again. Let me make that real. A woman wrote in about her brother. He had a savings account he opened 60 years ago and forgot he had. The beneficiary on it was a woman none of the family recognized, an old girlfriend, maybe a coworker. When he died, the bank paid her. Not his family, not what his will said. The form wins. Every time. So the second half of this job is not just filling out new forms. It is pulling up the old ones and checking whose name is on them right now. An ex-spouse, a parent who has already passed. Do it this week. Catch number 3, and this one gets oversold all the time. They make it sound like Payable on Death makes your money untouchable and instant. 2 honest corrections. It is not always instant. Some places, especially for things like treasury bonds or a very large balance, can still take weeks, sometimes months, to process a beneficiary claim. Usually it is quick, not always. I would rather you know going in. And Payable on Death does not erase your debts. If you die owing money and your estate cannot cover it, in many states, creditors can still reach the money you passed on this way, and if the person you named is also the one settling your estate, the law can require them to pay the valid bills first. So, Payable on Death skips probate. It does not hide what you honestly owe. Anyone who tells you it shields your money from creditors is wrong, and that piece varies by state. Now, the good news almost nobody mentions. Naming beneficiaries can actually multiply your FDIC insurance. A regular account is insured up to $250,000, but name Payable on Death beneficiaries, and the FDIC insures up to $250,000 for each one, up to 5 of them. Name 3, and that single account can be covered up to $750,000. So this one free form does 2 jobs at once. It skips probate, and it can quietly stack up the protection on your savings. Nobody tells you that one either. So here is exactly what to do, and this is the part to screenshot. Take this list to your bank this week. 1. Ask for the Payable on Death beneficiary form, in person or online. If the teller looks blank, ask for the branch manager. Every bank has it. 2. Name your beneficiary with their full legal name and their date of birth, and give their Social Security number if the bank asks, because that is how they confirm the right person later. 3. Name a backup, what they call a contingent beneficiary, in case your first choice passes before you do. No backup, and the account can slide right back into probate. 4. Get written confirmation that it is on file, and keep it with your important papers. 5. Do every account on its own, each checking, each savings, and each CD6. Call your brokerage and file a transfer on death on any investment accounts. Then pull up your IRA, your 401k, and your old life insurance, and check that the names on them are still the people you actually want. 7. Redo this every few years, or after any big change in the family, a death, a marriage, a divorce, a new grandchild. So that is the whole thing. Your will does not control your bank money. Without a beneficiary, it freezes into probate for months. With one free payable on death form, it goes to your family in days. Use payable on death for your kids, joint survivorship for a spouse, transfer on death for your investments, and go check those old forgotten forms. Now, one honest note: the small estate limits, the exact rules, and whether survivorship is automatic all vary from state to state. So confirm the specifics with your own bank. And if your situation is complicated, a larger estate, a blended family, a child with special needs, sit down with an estate attorney. This form handles the common case. It is not a substitute for a full plan when things get complex. But for most of you, this is 10 minutes at the bank that saves your family months of frozen accounts and thousands in fees at the worst possible time. Do it this week. If this opened your eyes, do one thing for me. Send it to your kids or to your parents, whoever needs to hear it. This is the exact conversation families keep putting off until it is too late. You can be the reason yours doesn't. And there is one more thing that can take almost everything you spent a lifetime building. A single government program that can put a claim on your paid-off home after you are gone. I break down exactly how to protect it right here. Watch that one next. I am Hank. Take care of your family.